Our topic today is diving deep into the current buyer's concerns about buying a home. So some of the statistics that came out last week, Fannie Mae released their HPSI, that is Home Purchase Sentiment Index. And it sounds kind of complicated, but it's basically this. They surveyed current homeowners and renters on their sentiment, how they felt about buying in this coming year. Now, 77% of those respondents said it's a good time to sell, right? That makes sense. But it also, they confirmed that when they asked Americans if they felt they saw an increasing number that it may be a bad time. Now, that's just the sentiment. That doesn't necessarily mean the truth. We're going to unpack that here today. So the percentage of those surveyed saying it's a bad time to buy hit 64%. That was up from 56% last month. So things are kind of uncertain in the sentiment. And let me just explain this. The HPSI explains that consumers are continue to cite high home prices as a predominant reason for their ongoing and significant diversion in sentiment towards home buying and home selling conditions. All surveyed segments have expressed greater negativity towards home buying over the last few months. Renters who say they're planning to buy a home in the next few years have demonstrated even a steeper decline in home buying sentiment over homeowners. And it's really likely that the affordability concerns are what's driving that. So let's look closely at the market conditions that impact home affordability. First off, it's mortgage payment. So the mortgage payment is determined by the price of the home and the mortgage. That's two things, right? The price of the home and the mortgage. Lately, monthly mortgage payments have gone up for buyers for two key reasons. Well, mortgage rates have increased from about 2.65% in January of 2021 to just about 3% today. Now, meanwhile, home prices over the last 12 months have increased 15%. So you're getting a double whammy: home prices going up and interest rates going up. And based on those rising factors, homes may be less affordable today, but it doesn't mean they're not affordable. So what is affordability, right? Well, let's break down what's called the ATTOM data. Okay, this is Home Affordability Report for the second quarter. And what it explained in this report was that the ownership cost of a typical home as a percentage of average national wage. So when you get a loan from the bank, you are subject to ratios, and one is the debt to income ratio, and the other is the home price to income ratio. And they're different for FHA loans versus conventional loans. But what it showed, so basically this index basically showed that the typical home price as a percentage of your income increased from 22.2% in the second quarter of 2020 to 25.2%. Super crazy, a lot of weird numbers, but basically what it means is this: about a 3% bump in the actual home. So your mortgage is about 3% more than it was a year ago. But here's the thing, is currently that percentage, that home ratio to income standards are at 28%. So the Freddie and Fannie and all those guys say, okay, your home price, what is the term? The average percentage of your wage can't exceed 28%. So at 25%, even though it's up for 22%, it's still more than it was, but below what they allow by 3%. So I know it sounds super complicated, but here's the deal. There are two major questions. Do you buy now? Do you buy later? Do you pay someone else's mortgage? Or do you kind of figure out a way to get into a place? Because the one thing that we know is for certain is that appreciation is going to continue at this rate. And in the greater Seattle area and on the east side, we will most likely continue to see 10% appreciation annually for the next 2 to 3 years, depending on how the economy goes. So the alternative number one is to figure out a way to buy. Alternative number two is to rent instead. Here's the bad news on that. Is rental prices have grown 9.22% in the last year. So when you buy a home, you're locking in an interest rate, 30-year fixed in most cases, not always, and a purchase price at that time. When you rent, you're subject to rental hikes constantly. And that's what a lot of people actually call me 1 month, 2 month, once they get a kind of a report, or their landlord saying, hey, it's time to re-up, and they see what that amount is. They see sticker shock and they go, gosh, why don't I just go ahead and buy something? Now we have an alternative there, but it's a limited opportunity for the right type of person. So we have been for some time working with a company called Home Partners of America. We featured them on this podcast. And the way they work is for those folks that are thinking about renting, maybe waiting to purchase, this may be a perfect, because it's an option to purchase transaction. So essentially the company, Home Partners of America, purchases the house on your behalf and you become the tenant. And you have a fixed value that you purchase that home for in the future. So it's not a concern about necessarily worrying about what your rental rate will be, because it's outlined there, because you are paying rent. But then you have an option to purchase. And what we've seen is that these options to purchase are below market value. What I mean by that is we don't know what the predicted appreciation would be for that specific home, but you know in advance what you're going to get. So it's another alternative to choosing to not buy. Here's the downside. The max in the Seattle area is $550,000. Okay, so it's not the mean or the average. But if that's in your budget and that's something that works for you, reach out to our team. We'll be happy to help. We should be able to find for you a home that allows you to transition into ownership. And let's say the worst thing happens, the market crashes, which I don't see any prediction for that whatsoever. But let's just say it flatlines. Well, you can walk away. You don't have to buy the house. So those are kind of some of those options, rent to own. So in conclusion, if you continue to rent, your chances are your rent will go up. If you're looking to buy and lock in today's interest rate and today's price, and I can tell you people that I talked to a year ago that are kicking themselves for not buying a year ago, and now find themselves in a spot where it's less affordable for them, but still affordable. And it's, most, I think they're predicting by the end of 2022 that mortgage rates will be about 4%. So we'll see what happens with that. But with all the inflation that we're seeing going on, there's probably an eventuality that that's going to have to happen. Some housing market analysts are saying that home prices are going to continue to increase, but at a more moderate rate. For the greater Seattle area, I don't know that we can go off of the nationwide average. So those are nationwide numbers. Long story short, you most likely want to have a more in-depth conversation about your specific needs. And if that's the case, you can reach out to the Eastside Real Estate team. You can call us at 425-200-4093, 425-200-4093.